Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you are with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Sarge. Stephen Guilfoyle is with us. Founder, President, Sarge 986. Great to see you both on this Friday. We got in our inflation report, our CPI. That was encouraging inflation news, to say that. The revision's not as bad as some people had expected. There was some talk there. So we have stocks at new highs. Sarge, how are you feeling about the market as the S&P 500 and the NASDAQ 100 are hitting new all-time highs today?
It's hard not to feel good about the market. All of our longs seem to be working. I think if you're having trouble making money on the long side right now, you probably have made some erroneous guesses as to not the health of the economy, because I don't believe the economy is really that strong. I don't believe in some of the reports we've gotten of late, but I don't think you understand where capital flows are running to at this time. I think maybe the market is really betting more on the Fed than maybe they should. Maybe we'll sell off soon. We'll have to watch for those signals. But for right now, I mean, if you look at your quarterly statements, folks, I mean, you're going to be, if you don't look at them all the time, you're going to be pleasantly surprised, you might say.
Yeah. All right, do you want the Fed to cut, and how many times, just quickly on that?
If the GDP numbers are correct and the jobs numbers are correct, the Fed really shouldn't cut, right? I mean, I have my doubts. I think Q3 GDP was inflated. I think Q4 GDP was inflated. And I know that November and December jobs numbers were inflated. None of them were presented accurately to the American people if you go through the data. But if you have to go by the headline numbers, then they shouldn't cut. If the economy is as weak as I suspect it is, then they do have to start thinking about cutting probably by May.
Okay. That being said, I know you have a short on Apple today. Not so hot on Apple. Why is that?
Yeah, let's say there's a few names you do have to selectively short this market, and Apple is the one of the Magnificent Seven, or maybe if you include Tesla, 2 of the Magnificent Seven that probably don't belong there anymore. Right? Apple reported on February 1st. They beat on EPS and they beat on revenue projections, but revenue only grew 2.1%. Yes, it was the first growth in over a year, but it was only 2.1%. iPhone sales were unimpressive. Mac sales were even less impressive. iPad sales were awful. Wearable sales were awful. Services are slowing it down, and that's the margin driver. Huawei is bringing a great deal of competition to the Asia market, so those decreased Chinese sales, they might not be a passing thing. That might be there to stay. So and also look at India. I mean, we'll get that later in this segment here, but India is a growing threat to China's dominance of not just Asia, but the emerging market scene in general. So if you look at the charts, okay, I'm actually going to ask Ben on this because I'm not sure what I see on the short term, whether it's a head and shoulders pattern that starts forming around the beginning of November and rounds out here into February, or if it's actually a double top reversal covering December into early February. I think it's a double top reversal, which would give me a pivot of 180. All right, if you go out longer, you go out to about a year or so, maybe 8 months or so, you'll see that Apple has topped in the same place 3 times. So I don't think Apple's going to really get too close to that 200 level anymore. My target price for Apple to the downside is 165. I mentioned my pivot is 180. I short more from 195 to 197 because those are the reversal tops. And I panic when it hits 200 because that would be a new recent high.
Yeah, I want to see what Ben has to say about the chart. Thank you for that.
Well, Nicole, I completely agree with Sarge on this in terms of the levels he just pointed out, and not necessarily the short approach, but the fact that there could be some opportunity here from the short side, because I think we're still in a longer-term trend higher, but we'll break it all down here. Let's begin first and foremost with the 30-minute candle chart, because it's been a while since we looked at Apple, and the last time we were seeing a bit of a trend up. We were seeing after the middle of January, price activity rallied all the way up to 197. You can see since it's been just a mess. Look at some of the volatility we saw in reaction to earnings. Let me just identify again, last time we looked at Apple, we were talking about these areas of value that were moving at higher and higher levels. We were talking about how we were balancing around 194, and we mentioned, hey, the bulls don't want to see us get below 192. Look what happened, and why didn't they? Well, because that invalidated the trend up that we had been in. So since it's been kind of choppy, we haven't seen a lot of follow through, right? We didn't see any real conviction below that mid-Jan low, and you can see how we're just kind of hanging out in the middle of the range here. So I always say, when in doubt, zoom out. Let's do just that. Sarge brought to our attention a couple key levels. He mentioned the triple top that he sees playing out here. That's right around 199. This is the area the bulls want to get above right now, because after seeing high conviction throughout the month of February, March, April, we've gone basically sideways. So we've lost that momentum we were seeing to the upside, and we're currently balancing right now. If you take a look at the area that we're forming this range around, you can see that, well, it's forming around 185, right? So in order to get that high conviction, that real energy associated with this follow through associated with this trend to the upside, you're going to need to take out this 199 level, but no indication that we're not trending higher still. We are. Value's moving higher, right? So you've got, in fact, a key test that happened right around 174 that was, for the most part, held. So let's take another step back, and I want to show you what's going on as we look longer term here, just adding more time onto the chart and pointing to the fact that we're still in an uptrend. This is a weekly candle chart, but here's the range that we're in here. And so I can see, again, the potential to see further chop within this range, but still in a longer term uptrend, that's for sure.
Okay, so a long-term uptrend, not what you're saying, Sarge.
Well, you know, my net basis is a little over 193. I'm up a couple of percent on this trade. I do have a little room to play with. And as long as I stick to my panic point of 200, even if I get hurt a little, I won't get hurt a lot. So I think the risk is worth the reward in this name.
All right, next up, Netflix, your thoughts there?
Well, it's another one I'm short. My net basis on this one is 557.11 right now. So I'm down about 1% or so, not too bad. Reported January 23rd, missed on earnings, beat on revenue. Current quarter earnings guidance was strong, but revenue guidance was soft. Net additions, as we know, were very strong, but are projected to be down sequentially. The stock is up 12.6% since Q4 earnings and 62.4% since Q3 earnings. It has since flatlined. I'm hoping that it's probably going to go sideways. It's already started to consolidate really since late January. It's come off of its technically overbought RSI reading. The daily MACD, if you can see that, has finally experienced a bearish cross under by the 12-day EMA through the 26-day EMA. There are two large unfilled gaps now staring the stock in the face. The first one needs the $481 level to fill. The second one is even more aggressive, a $344 level to fill. I'm not even going that far. My target for Netflix, my aggressive target, is 481, which would be that first fill. My pivot is $538, which is currently the 21-day EMA. I short more from 557 up to 579, and I panic, so I can't lose a lot of dough. I panic at 580, which would be a new recent high.
All right, good to know. And look, I mean, when we see Netflix, we've seen it at that recent high of 579. What say you, Ben, about these charts, please?
Well, I can understand the apprehensiveness alongside this one, especially trying to position to the long side because it's had such a huge run up. I also think there's a possibility that we could start to balance here, so there could be opportunity again for both sides here, but I think the longer term trend is the upside, and let's begin again a similar situation, similar fashion as we did with Apple with a 30-minute candle chart. Easily identifiable, two phases of development. I mean, if you don't see this, I'm not sure what you're looking at here, because you've got horizontal, sideways, random type price activity. Earnings catalyst comes into play, and you get that imbalance that's created, higher highs and higher lows. That's a initiative type vertical phase, and then you transition back into that sideways phase. So we're looking at a 30-minute candle chart. So again, a limited amount of information here, but it really speaks to, again, as we take a look here, the two phases of development, right? Right around 480. Sorry, that was meant to be labeled there, 565. So let's move away from this 30-minute candle because I want to add a little time on here now and show you an hourly candle chart and almost an identical depiction, right? Very well defined. Two separate areas of consolidation that have formed. I'm sorry, four on this chart. Areas of consolidation that have formed, but I'm looking at these two most recently, 470 all the way through November, December, into January of this year. You get that high conviction move up and then sideways consolidation again. So this is the move that we just looked at. You can see holding above and right around this 565 level here right now as we speak. As long as we're above 470, I think this is key and still in a very bullish type pattern. Let me show you the other time frame that I queued up here, and this is a daily chart. So again, really speaks to the strength that Sarge was just talking to about what we've seen as far as this move higher and the momentum associated with it. But look at this gap up here that's been coming into play, and I think that we recently, again, just went into a vertical phase, and then, as I mentioned here, it's possible that we're going to go a bit sideways here right now and provide a little bit more overlapping rotational, something a little bit more for a two-sided trade relative to this, which was very much in favor of the bulls at this point. So let's see, again, different times or different phases of development call for different approaches towards trading. Maybe we'll see a little bit of weakness in the near term, but longer term, still trending higher.
Right. Okay. So again, he's not in this short camp, but to your point, you're not loving some of the outlook for this one, Sarge, right? From the company, even.
Yeah. No, I don't really like the whole industry, the whole streaming industry, which where like with other competitors, you might have cash flow streams that might support the streaming industry. Netflix, although they're doing well right now, this is all they have. This is their whole ball game. So they either have to maintain what the pace of growth or, I guess, earnings success that they've been having lately, even though everyone else in this space is running into trouble. I just don't think Netflix can sustain this much longer. And like I said, I have panic points. So if I'm wrong, I pack my bags and I get out of the small loss.
Okay, next up. Now, this is one that you like. You had mentioned India, but talk about emerging markets. And you have an ETF here, ex-China, that you do like.
Right. This is EMXC for the folks at home who've never heard of this. All right. It's the iShares Emerging Markets ex-China ETF. I'm currently long. I'm only up about 3%. My net basis is 5404. It's a play against the deepening property prices, debt crisis in China. It's also a play on the move of industry and cross-border investment that had gone into China for decades into places like India going forward. Additionally, it's a bet on the Indian consumer as that economy grows in a much more fertile environment, I believe, than China and some of the other emerging markets. If you look at the chart, we have an almost perfectly formed up cup and handle here, which started around late July. It's run into early 2024. We have a pivot of $55 on it. Relative strength is fine. The daily MACD is improving. India has been a focus for a couple of months now. I'll give the kids at home INDA, which is the iShares MSCI India ETF. I'm up in that one. And I'm also up in SMIN, which is the small caps in India, iShares MSCI. I got all these Indian ETFs and stuff from Keith McCullough over at Hedgeye. I'm sure you heard of him. And I don't want to give credit. I don't want to take credit when I got somebody else's homework working for me here. But anyway, back to the EMXC. My target is $63. As I said, the pivot is $55. I add down to the 50-day SMA, which is currently $54, and I panic if the ETF loses the 200-day SMA, which is currently $51.
All right. Thank you for all of that. And then EMXC. Ben, take a look at this one.
Yeah, not only someone else's homework working for him, but also trend to the upside. So I'm on board with this one, Sarge. We're going to end on a positive note here. Definitely agreeing with the bullish sentiment. Taking a look here at a 5-minute candle chart here, you can see just over a very short period of time, the rally we've seen this week from 54.46 all the way up to 55.75 and holding this upper level. Exactly what I look for. Areas of value that are forming at, well, in this instance, higher and higher levels. Now, we've got the fine-tooth comb out, that's for sure, right? But I wanted to show you, again, even on these ETFs, we see futures, stocks, options. As long as it's open auction and it's involved in that process, you're going to see these phases of development, the two price phases here, horizontal, shifting to a vertical, horizontal, wash, rinse, repeat, easily identifiable. We're talking bottom left, top right. Depending on how you want to describe it, it really shows the same thing, right? Trend up. Similar pattern playing out here as we take a step back, right, to the hourly time frame. And Sarge was talking about that cup and handle. We'll have a look at that in just a second here. I want to show it to you on the bigger picture because it actually looks like a couple cup and handles that have played out here. But just looking at this here, we've got a hourly candle chart here. We're going back to when stock was trading around, the ETF was trading around 47, balancing around 49. Big move up. 56.20, sideways around 54. But look at this here. You're going to notice that we get that pattern that plays out here multiple times here, right? You can see that staircase type pattern, wash, rinse, repeat, where even within this bigger picture, high conviction move up, sideways consolidation, you get that redemption, that multiple times of occurrence here to kind of solidify the working assumption. Again, we're trending higher here, pretty well defined at this point. Sarge mentioned the cup and handle that we saw into, what was it? He said starting out in the beginning of July, right, into October, and you can see here that we've sort of formed this bottoming pattern playing out. Wasn't the first time we've seen this happen along the way. This is a stock here that's been, an ETF that's been recovering very well, going all the way back to September, October of last year. It was down around 44, as mentioned. Again, we recently up to around 56. I agree with the bullish stance on this one, that's for sure, Sarge.
All right, I'm going to leave it there. Sarge, you have a last minute thought?
Yeah, overall, I think India is a good place to be right now. If you're looking at the world and you're looking at the way things are shaking out, and you want some foreign exposure because you never want to be all domestic, I think India is the place right now with the most potential and most positive GDP right now at the current moment.
All right. Thank you so much. Great to see you both for the big three on this Friday. Stephen Guilfoyle of Sarge 986, Ben Lichtenstein. Thank you.